Hey guys, Stock Saturday, and it's been a pretty good week for me. Up 7.8% or 24,000. So pretty happy with that. Compared to the Nasdaq is up 3.77%. So pretty good week for the Nasdaq, new all-time highs, and the S&P was up 1.69%. I think that is, yeah, pretty much all-time highs every other day. So yeah, the market's all looking good, and yeah, had a sort of reasonable week in sort of bit isolated. Broadcom, Taiwan Semiconductor, and Clean Spark, and some of the options. So yeah, let's have a look at some of the news. So something contributing a reasonable amount was Broadcom announced their second quarter results. Their sort of year is a little bit out of sync with the calendar year. So we're getting second quarter results now, looking sort of pretty good. Nothing sort of blowing the doors off, I didn't think. They did say AI an awful lot from the looks of it. They're sort of saying it's driven by AI demand and VMware. Fair enough. An awful lot of sort of related products to the AI infrastructure, where people are buying NVIDIA chips and setting up new sort of data centers and things. They're going to be using an awful lot of Broadcom products. But yeah, they're sort of still, it's people sort of liken it to digesting, a python digesting a pig. Buying VMware, they've got an awful lot of sort of amortization to do, some write downs and that sort of thing, and sort of maybe next year you'll start to see what the real forward looking profit will be. So you've had net revenue up 43% from the same quarter last year. That's sort of kind of expected with the acquisition. It's not really the one to focus on. Net income down sort of 30 odd percent, including the acquisition. So that's not ideal. As I say, it's sort of due to a lot of things. Earnings per share is down. That's probably what we want to see going forward. That's the one you'll be looking at because they've issued a lot of stock. So net income isn't really the one to focus on. It would be earnings per share to sort of see if that dilution and debt increase was worth buying them, which obviously everyone is thinking that they will be. Non-GAAP, so adjusting for these things, they're up 64 cents. $10.32 earnings per share to $10.96. So far, their adjusted earnings are saying that it was worth it. Obviously, not massive growth, but we'll know more, as I say, sort of towards the end of the year and sort of into next year. And highlighting that this change does sort of make their mix quite a bit different. They used to be last quarter, last year, 78% semiconductors, 22% infrastructure software. That's now 58 and 42. So 175% increase in software revenue, and you would think software revenue will gain obviously higher margin and hopefully a higher multiple. So that is what is sort of pushing their share price up. They've kept the dividend the same at $5.25, and they've slightly increased their outlook to 51 billion in revenue and 61% EBITDA margin. So these were 50 billion and 60%. It's not a massive increase, but percentage EBITDA margin is always good. So as I say, this is the digestion. Previous quarter, you had 1.38 billion of amortization of acquisition-related intangibles. They've got 1.51 billion this quarter. That was 400 million last quarter from sort of still some legacy acquisitions. But yeah, they need to sort of work through all this, and then we'll know sort of what their real profit is. And then the balance sheet, for some reason they're comparing to 2 quarters ago rather than sort of last quarter or this quarter last year, but fair enough. Cash is down sort of 4 billion or so. and sort of other current assets increased. Obviously, they're a big company, so these numbers are going to, fly around a little. Goodwill increased 43 billion to 97 billion, obviously with the acquisition. Intangibles up from 3.8 to 45 billion. And then with that comes the debt increase. So 37 billion to 71, and 3.8 billion long-term liabilities to 13.4 in other liabilities. So yeah, for the total asset increase and potential profit increase for partly dilution and partly this debt, looks good. They do tend to sort of load up on debt to acquire someone, and then over the next 3 or 4 years pay that down and be at sort of normal multiples again, and then rinse and repeat as long as the sort of securities and competition lot allow them to. There is sort of obviously fears that they won't be allowed to acquire all that much more, and this sort of growth by acquisition model will come to an end, but then we'll have to see. So they're up 23% for the week after these earnings largely, and yeah, sort of off the back of semiconductor industry doing well in general. They have been sort of on the up even leading up to these earnings. Difficult to sort of tell whether they're getting grossly overvalued. I think they're sort of looking at, after all of this is worked through, about 30 to 35 times forward earnings. And yeah, that's obviously a hell of a lot. It's similar to Nvidia's forward earnings, really, although I think Broadcom's are potentially a little more durable. Obviously, Nvidia's is sort of just the big tech companies piling into buying Nvidia chips through sort of capex requirements, whereas Broadcom is a little more sort of recurring, and then obviously you've got the software revenue, which should be even more recurring. So yeah, 35 forward earnings, potentially very high, but yeah, I'm sort of holding on a little longer. Obviously, it's one of my only tech stocks, really. I don't hold a huge amount, so I'm kind of just keeping with this for the minute. Thought we would highlight the FOMC's dot plot and the sort of summary of economic projections. They had this week. Didn't raise rates, obviously. No one was expecting them to. But they sort of give out these, figures that people will sort of pore over, 0.1% on things, and yeah, that sort of drives stock prices, of course. But I do think it's sort of worth focusing on some of the figures. Unemployment, sort of interestingly, is at 4%. We had those numbers recently, and they're sort of projecting for the end of the year unemployment at 4%, so no increase at all, considering it has been sort of rising the last few months. And end of next year, they were at 4.1%, so basically no increase at all. 4% 2026 as well. So they don't anticipate, or whether they expect a mid-year spike and then to come down again. They don't really say. They're just saying end of year. But they increased those to 4.2% end of next year and 4.1% following year. 4.2% long-term unemployment rate. So interesting. 4% admittedly is a low historical rate. So nothing too wrong there, but at the moment it's creeping up quite a bit, so we'll have to see. Core PCE is the sort of, I think people miss whenever Jerome Powell says inflation, they think sort of headline CPI, and he doesn't mean that. He does often say core PCE, almost in the same breath as inflation. And they had that at 2.6% end of this year, and they've raised that to 2.8%. And he did say in the meeting, because it's at sort of 2.6, 2.7% at the moment, so they're not projecting it to come down. And he did say he thinks 2.6, 2.7 is a good place to be. I think maybe people are reading into that a little too much. He was probably meaning that it's been coming down, and so being at 2.6 or 2.7, if it continues to come down, is a good place to be at the moment. I think people sort of took that to mean he's quite happy with it staying 2.7 long term, which he's obviously not meaning. They've got end of next year it coming down to 2.3%. They were at 2.2, and then by 2026 at their target of 2%. And they don't give a longer term core PCE figure, so not sure why. And Fed funds rate, they sort of still projecting cuts, but pushing them into next year. So they were at 4.6%, so that's sort of 3 cuts basically. They've now raised that to 5.1%, which is 1 cut, and still sort of 4.1% by the end of next year, where they were at 3.9, so 1 less cut, and then exactly the same at 2026. So not really coming down to the sort of 0% interest rates that we got used to for a long while, unless something drastic happens. But as always, looking at the spread of different people, you kind of get the idea that most of them don't really have a firm sort of hold on what they think is going to happen. Obviously end of this year, they kind of know where things are. They're all sort of between 1 and 2 cuts, but then just the end of next year, suddenly it throws out completely. You have a lot of people at 4.25%, but you have outliers. One, I call him Mr. Hawk, still saying no cuts at all by the end of next year. And then you have other people, rates coming down, or one other person, rates coming down to 3%. And then, 2026, Mr. Hawk is saying 2 cuts in 2.5 years. And sort of, the other people coming down to 2.5%. And that is their sort of longer term expectation, that 2.5% is healthy, just slightly above the inflation rate. It's not something I really show too often, but I thought quite interesting notes in the betting odds for sort of elections coming up. We've got, UK election next month and the US election in November, and the odds seem very, very odd. If you look at polls, they are nowhere near these sort of figures, but yeah, we have our UK general election, Keir Starmer to be Prime Minister after election at 1 to 100. So for people who don't like fractions, this is basically meaning, £100 bet wins you £1 on Keir Starmer to be Prime Minister. So almost guaranteed, they're saying. A Rishi win is 25 to 1. So a £1 bet gets you £25. And he's the same odds as Nigel Farage. So almost certainty that Conservatives don't win, I would sort of take this to mean, which I think is a little bit odd. With stranger things have happened. We've had previous elections, obviously Brexit vote and UK election, Boris Johnson winning, sort of surprisingly, Theresa May winning surprisingly, and the Donald Trump victory in 2016. Polls were sort of completely wrong. I don't know what the betting odds were back then, whether they were different, but yeah, very unusual. If you look at the US, it's a little bit less stark. They're not saying it's guaranteed, but in the polls, I think Donald Trump is ever so slightly favourite, whereas on the betting odds, he's quite noticeably favourite, 4 to 6 versus 7-4 for Joe Biden. And then you start to have sort of, thoughts of people getting kicked out and, Michelle Obama coming in for Joe Biden potentially. Similarly with the UK one as well, Rishi's 25 to 1, but David Cameron and Penny Mordaunt are 40 to 1, Boris Johnson 50 to 1. So whether they're sort of thinking Rishi gets kicked out before the actual election is a little bit strange. I find it hard to believe if Conservatives win that Rishi would sort of get kicked out. So you'd think he would be Prime Minister. So I don't really see where these David Cameron and Penny Mordaunt figures come from, but fair enough. I think the US one is probably more interesting to markets. We kind of know Donald Trump has been sort of setting his stall out, basically. He wants to lower interest rates regardless of the Fed. He wants to sort of So apparently give the Fed less power, basically, and is almost saying that he wants to dictate interest rates himself, and the Fed can be sort of used for less important things, I guess. Whether he wants to sack Jerome Powell, I don't think he's quite made clear. He said he wants to sack Gary Gensler, and he's sort of jumping on the crypto bandwagon, it seems. So potentially a positive for crypto. He's also saying he wants basically to artificially lower the dollar to presumably increase exports and sort of their international trade. So that would be good again for crypto stocks and gold, really anything but cash. So if he is favourite, I do want to be sort of still piling into hard assets. So just looking at the economic news, we had a little bit of UK news earlier in the week, some fairly poor sort of job numbers, unemployment increasing, employment change down 140,000 people, was expected to be 100,000 and was 177,000 previously. So unemployment going up 4.4% above expectations of staying the same. So UK, you can see why they're potentially looking for a cut. I believe we're next week our meeting, so it'd be interesting to see if they cut following the ECB. And then Wednesday, before the FOMC meeting, you had US inflation come out, pretty much a red wall. Sort of core CPI and headline CPI both coming in below expectations. Powell did reference this in the meeting and sort of said it sometimes has an effect, and people are allowed to change their opinions after these numbers come out, but he wouldn't sort of go into detail about whether anybody actually did. And then Thursday as well, some sort of fairly weak US job numbers, sort of initial jobless claims picking up to a reasonably high level, continuing claims on the increase, and sort of PPI numbers quite a bit lower than expected. So producers inflation sort of coming down, and that was it. Sort of fairly busy news week. So as I say, portfolio-wise, it's sort of largely driven by CleanSpark, provided sort of fair amount of this gain. I think it's up 13% for the week, but still sort of bobbling around really. It was down last week, up this week, and we just sort of need more of a stronger crypto move. Whether that will be after the summer, we need to see. Gold and silver stuff doing sort of reasonably well. Core doing a lot better than Equinox. And Fortuna, still remains to be seen whether Fortuna's dilution is going to be worth it. I kind of wish they hadn't, but yeah, I'm sure he's got plans. Pan American back below $20, but yeah, still looking okay. KGHM sort of taking a bit of a knock with the silver and copper price sort of coming down, but yeah, still 141, looking pretty good. Option side is sort of kind of where it's hotting up though. I've sort of spent £500 of my cash looking to sort of deploy a little bit more and potentially add a little bit more. Core mining sort of coming back up to really solid profit levels. I put my £500 into Equinox, probably unsurprisingly, I think, considering it's still sort of at the lowest level of my gold and silver stocks, and at sort of what I think is really, really good value, considering sort of the Greenstone mine coming online. Their sort of second half of the year figures should be looking really, really solid. So the price sort of being where it is, I think is great. So I'm sort of going really, really heavy into these options at the moment, sort of still being in the red and it being a £12,000 position. I will continue, I think. CleanSpark sort of rose a little bit with their price. HiMax looking pretty solid at the moment. I've not added to that, and I won't be sort of adding to that too much more, I don't think. It's still a risk, so having that at nearly £10,000, don't really want to be adding to that. Core Scientific is just bucking all trends. You know, Bitcoin's down this week, and Core just continues to keep going up. That's 270% in the green now, and at £3,000, I think I put about 700 quid in. So Not too bad. Right, platform's slightly up. It's not. I have been sort of weighing up whether to add a little bit more to this. It was sort of really Equinox or Riot, and sort of went with Equinox in the end. Riot sort of looks okay, but I think they do need to sort of resolve some issues. Whether they're going to be buying bit farms is sort of key on the list. I think they're sort of getting into arguments, and it's sort of looking a bit handbags at dawn at the moment. So I think they all need to sort of get into a room and grow up a little bit. So there you go. Still somewhat slow going. Leave your thoughts in comments below. What you guys are buying. If you're just sort of holding tight, and if you're just sat in the S&P and Nasdaq, loving life. And like and subscribe. See you soon.